As a stock market investor, the next 6 to 18 months could be the most transformative years of your life in a negative way or in a positive way. Okay, that's what we're going to get into in this video. Before that, my name's Austin. I'm a co-owner of cloudmusicsuite.com, and I'm also a stock market investor, of course, so that's why we're talking about this. If you're new to the channel, thank you for subscribing. As a very quick thank you, let me show you a beautiful picture of my cat. All right, her name is Millie. She's such a sweet girl. All right, let's get into this thing. The next 6 to 18 months could be extremely transformative for your net worth as a stock market investor. If you're an active stock market investor or a passive stock market investor, this could be a huge, huge time for you. So in my opinion, this is pretty much a once in a decade time frame where we need to plow as much money into the stock market as humanly possible. That might mean getting a second job. Do you work 40 hours a week right now? Yep, that's normal. Can you work 10 more? Can you get a 50-hour week? Is that going to increase your earning capacity, by that extra 10% or extra 20%? I can plow all of that money into the stock market. If you're a stock picker, this could be huge for you. Yes, there's risk with that. But even if you're just an index fund investor, like you're buying the SPY or the VOO or the Dow, right? One of these indexes, or even VTI that tracks the whole stock market. Putting money in now at these depressed prices, and if we keep dropping, continuing to buy, etc. and so forth. We really haven't had a time frame like this since COVID, but really COVID wasn't like a good time to buy. You kind of had like a month to maybe 3 months maximum, depending upon the industry you were looking at, to actually add quality names that were at heavily discounted prices. Now we have countless stocks down 30, 40, 50, some even 60%. And these are like solid companies with like free cash flow positive, cash generating machines, great balance sheets, amazing business models, right? These aren't just speculative companies that have dropped 60%, 50%, 40%. Some of the biggest companies, some of the best run companies in the world have dropped this much. So this is such an important time to be a frugal spender, all right? I don't think you should always be the most frugal spender ever. I think it's important to spend some money every now and then. But the next 6 to 18 months, I think being as frugal of a spender as humanly possible would be one of the best decisions you've made, that you'll make maybe this decade. Using the money that you save from being that frugal to put into aggressive investing, absolutely aggressive investing, all right? Tons of side hustling, tons of thinking of new ways to make a little bit more money over the next 6 to 18 months, and all of that surplus money that you're not normally earning, go ahead and put it into the stock market. Go ahead and put it into your investments, okay? Make sure you've still got an emergency fund. We're never touching our emergency fund money to invest. Saving money, very different than investing money. Saving money normally is for a rainy day or potentially for a big purchase. Probably shouldn't be making any big purchases over the next 6 to 18 months, if at all possible, but got to make sure the emergency fund stays intact. Got to make sure that your daily and monthly and weekly spending is reasonable, okay? Stay frugal, make sure that emergency fund is full, and plow all that extra money into the market. In order to make this happen, you got to be nails. You got to be so sharp, okay? Eat clean food, sleep well, work your face off, have a good framework around how you're going to make the most amount of money possible over the next 6 to 18 months. And the primary purpose of this is to take your money from what I call your fake jobs. Okay, your fake jobs are the ones that you work for. All right, you go to work, you get a paycheck, they pay you money for your services and your time and your value, etc. That's your fake job. Your real job is to build your net worth as an investor. Okay, that's your real job. So take your fake job money, put it into your real job. You're not going to regret it. Okay, missing a few days in the market completely destroys returns, because just missing the best 10 days can hamper returns by a massive margin. So stay invested, keep on buying. If we dip lower, buy heavier. If we dip lower, buy heavier. If we dip lower, buy heavier. Never touching your emergency fund money, but plowing as much money as possible into stocks. Looking back 6 to 18 months from now, I don't think we're going to regret it, okay? I could be wrong, but I really don't think we're going to regret it. So stay safe out there, stay smart out there, work your face off, invest in the stock market. We're not going to stay at these discounted prices forever. Come back to this video 6, 12, 18 months from now, once we're on the upward trajectory. You won't regret it. Okay? Have a good one.